As financial advisors, agents out working with clients and helping them plan for their retirement, securing the highest guaranteed income is something that's rather important to most of them. Hi, I'm Randy Pierson. I'm Vice President of Life and Annuities for Gordon Marketing. And on today's episode of Selling Life and Annuities, I've got Tim Luby, our Regional Vice President for Annuity Sales with me. And we're going to be talking about how you as an advisor can do your best job in securing the highest guaranteed income for your clients. Stay tuned. All right, Tim. So this whole issue of maximizing guaranteed income in retirement for clients is a hugely important and often talked about concept and topic for advisors. So what are some of your thoughts, some of your basic thoughts with regards to how we at Gordon Marketing can do our best job for agents in helping in this endeavor?
Yeah, that's a good question. We're fortunate to have tools at our disposal that help us determine what the highest guaranteed incomes are using the various, tools that could work out there, whether it be an annuitization, intermediate annuity, whether it be a guaranteed income rider. We have tools can compare all the stuff that's out there and hone in on what's the highest guaranteed income. And very often, if we talk about guaranteed incomes, the highest income wins, all other things equal.
Okay.
Clearly, there's some other things that we'd have to consider, like the quality of the carrier and things like that. But it's phenomenal to have the tools that we have that help us identify what are the highest and then be able to hone in on what would be the recommendation.
Okay. When an advisor is doing this kind of planning and we're assisting them in that endeavor, what are some of the risks that the client faces and that the agent needs to address?
Yeah. Well, probably chief among them would be, interest rate risk, inflation risk. Longevity risk is probably one of the biggest ones, and one of the ones that annuities have perhaps one of the greatest advantage over all the other products in financial services in terms of being the only solution out there that they can buy that can offer an income that they cannot outlive. So that's one of the big ones and ones that we've got a significant advantage of in terms of being able to address it.
All right. So addressing that longevity risk and the tools that we have to assist in meeting the needs of the client. So talk to me about, what are some of the nuances that are inherent within products that can have a bearing on maximizing that income, that guaranteed income?
Well, for many guaranteed income solutions or withdrawals, the nuances are, relative to the core performance of the product. But within the guaranteed income rider, most of those products have potentially bonuses, potentially step-up rates, that the benefit base or the income base can grow at, and also withdrawal factor. And all of these can come into play in different ways. It can be products with a great bonus and a great step-up, but not really great withdrawal factors, or vice versa. Little to no bonus, so step-up rates, but really good withdrawal factors.
Yeah.
And all of them contribute to where they fit, let's say, on the spreadsheet in terms of where they rank for guaranteed income.
Yeah, so I'm confident that there are a lot of agents out there who perhaps annuity sales isn't their main line of business, but they have the opportunity to write significant levels of premium and are not fully aware and cognizant of how those moving parts all interact. When you're planning, when we're assisting agents in planning for that guaranteed income, does age have a factor in that? And how does when a client wants to start taking money impact that issue?
Right. Oh, it's a great point. Both age and when they want to turn the income on, when they choose to, are going to have an impact on the income. Age, in many cases, we see with the options that are out there, whether it be annuitization or guaranteed income riders, that the income gets higher as the person gets older. Very often every year that they get older, you see a higher withdrawal factor or a higher annuitization rate. The other thing would be the step-ups, the time. So, for someone that's going to be taking income in 5 years, their benefit base may grow by 50%. If they're going to take it in 10 years, it may double. And the income is going to be based on that higher benefit base and on the higher withdrawal factor.
Yeah.
So the age that at which they decide to turn income on and the time that they had for things to grow really can make a big difference.
Yeah, so the length of time that money percolates within the annuity and the age with which they take those withdrawals. The basic principle sounds to me like the longer you wait to take your money, the higher the guaranteed income is going to be.
Yes.
And you and I were talking the other day that it seems to me, at least, that sort of 70 is the new 65, and the way people are living longer, that maybe at some point, who knows, 75 might be the new 65. I mean, who knows? But let's talk for a moment about other alternatives. Obviously, clients have a lot of options as to where they can place their money. Let's briefly chat about what are some of the other options and where this solution might fit in a better position.
Right. So the options that we would consider would be generally annuitization, withdrawals from an existing annuity, maybe using a 10% free withdrawal or a systematic withdrawal program, the guaranteed income riders that we talked about to a degree. There's also a newer breed of product out there that are income riders, but they're performance driven. Mm-hmm. They really depend on how the indexing typically would affect the value of those numbers. That's another thing that kind of comes into consideration. But all of those are going to basically come down to the client needs to understand the differences between those. You got to do an apples to apples comparison. Yeah. If you're talking about spreadsheeting income, and comparing a performance driven income to a guaranteed income is not apples to apples.
Yeah, I think you really hit on a salient point there. Another issue that I think a lot of advisors aren't aware of or think to ask or perhaps aren't advised on, and that is the guaranteed income option or scenarios with various products versus non-guaranteed, all right? So, I think we've, during this video, covered several subject matters, several topics that are important for agents in helping their clients provide for a safe and secure retirement. If you're an agent out there and you're watching this video and you'd like to tap into some of our expertise, some of our tools, some of the products that we have available to meet your clients' needs, please don't hesitate to reach out to Tim Luby, our RVP of Annuity Sales. He and myself certainly are waiting for your call and happy to help you do the best job you can for your client. But with that, we must call this episode of Selling Life and Annuities to an end. I'd like to ask you to do me a favor and click subscribe at the bottom of this video, and also click that notification bell. So every time we come out with some new content, you'll be notified and you'll be sure to watch. So with that, thank you for your time. Happy selling. We'll see you next Tuesday.